Price stays near the 120 moving average, but it cannot leave. The April 12th Asia session forms inside the April 9th U.S. session box. The upside frame starts at the April 9th U.S. lower boundary. The failure line sits at the April 6th U.S. upper boundary. The first completion line sits at the April 10th U.S. upper boundary. A second completion line sits higher, at the April 17th U.S. upper boundary. The full distance is there. You see the touch. You take it. It reacts immediately. For a moment, it works. Then it stalls. Now you feel it. The level is right. But the move is still small. That is the pressure. The 120 moving average stays close. Price cannot separate. So trailing feels possible, but only if distance appears. The frame is clear. The risk below is smaller than the distance above. The ratio stretches to 3.44. That looks strong. But here is the problem. Price reacts from the April 9th U.S. lower boundary. Then it slows before reaching the April 10th U.S. upper boundary. Then it comes back again. You take the same level twice. The first time stalls. The second time moves without you. Now the trap becomes clear. The structure is right. The reaction is real. But the move still has to create space. If it cannot move away from the April 9th U.S. lower boundary, it does not hold. If it stays too close to the 120 moving average, the move fails earlier. If it cannot reach toward the April 10th U.S. upper boundary, the bigger April 17th line does not matter. Now you feel the whole setup. Correct level. Correct frame. Still uncomfortable. That is why this session matters. The upside exists. The ratio is real. But nothing is easy until distance finally holds. Execution conditions remain in transition.